name is Brian Aycock. Today, I want to talk a little bit about insurance claims. I want to go over some of the terms that insurance companies use on their paperwork. Some of it might be a little different, but this is pretty much the generic terms that are used. Now, one of the first terms you'll see is deductible. Deductible is the amount that the homeowner is responsible for in an insurance claim. Now, there's also the replacement cost value of the RCV. RCV is the total amount that it's going to cost to repair your property back to whole. So say the insurance cost says it's $10,000 to repair your roof. That is the RCV. Now, there's the depreciation. Depreciation is the amount of money they take off the claim based off the value of your property at that time. So what I mean by that is, yes, they're saying it's $10,000 to repair the roof, but they're saying it's only worth maybe $6,000 at the time that they go out there and inspect the property. Now, where's the rest of the money? So the rest of the money is called recoverable depreciation. So the insurance company is holding that money until the property is brought up to completion, and there is an invoice saying that their job was done. In some cases, you might have a non-recoverable policy. Now, you need to check with your insurance company and make sure you have a recoverable or non-recoverable, so you plan ahead of that. If you have a non-recoverable policy, that means that the money they give you on the first check is pretty much it. They're not going to give you anything else on recoverable depreciation. Now, the next term is actual cash value, or ACV. Now, this is the money that the insurance company is going to give you on their first check, basically. So they're going to say your claim is, again, $10,000. You're going to subtract, say you have $1,000 deductible, that's $9,000. Say they depreciate it, $2,000. So $7,000 they owe you to start the job. So they're going to give you a check in the amount, it's an ACV, $7,000. When you do get the insurance paperwork, there's going to be a lot of line items. Basically, the line items, they break out every single thing involved in replacing your property. It brings your property back to normal, to 100%. So, there's going to be a line item for the roof. There's going to be a line item for hauling it away. There's going to be a line item for the drip edge, different things like that. It's going to be all broken down, and it'll be several pages long. Another term to know about is supplements. Supplements are things that the insurance company did not figure in the first estimate. For example, is like the permit. So at the end of the day, when the job's complete, we're going to supplement for the permit cost. And then the insurance is going to review that and add that to the claim and send that to another payment. Couple examples of what a recoverable and non-recoverable policy look like. And in some insurance claims, you could have a mixture of recoverable and non-recoverable. So recoverable is going to look similar to this. It's going to have the two round brackets at the end. A non-recoverable is going to have like what we call like the alligator clamps at the end. That means the insurance is keeping that money, and you're basically just getting the ACV money out of that. Now, if you need any help reading the insurance paperwork, myself and my guys are trained in reading the insurance paperwork. We can sit down and help educate you on the process and go line item to line item, explaining everything that's on the insurance paperwork, and go from there and get your property back to normal. Thank you.